Consumers spent a record $5.29 billion on Thanksgiving Day. That's according to Adobe Analytics. That's up 2.9% compared to 2021. So just how will consumers be spending their money this holiday season? Well, for more on what to expect is JLL President of Retail Advisory Services, Naveen Jaggi. Naveen, thank you for joining us on this Black Friday. So how surprised were you that consumers were still so resilient this holiday?
Well, the consumers haven't surprised me at all this year. We've been obsessed over the idea of recession for the better part of 2 quarters. And in spite of all that talk, and in spite of increased fuel pricing and increased housing prices, the U.S. consumer continues to spend money. They look at their optimism towards 23 with saying, we're not living through 2008 again. So anything other than the 2008 meltdown for them is reason for them to be optimistic. And we continue to be a consumer-driven economy. So I don't see any pullback right now. And I'm actually looking to a very bullish holiday season in the next 4 or 5 weeks.
Naveen, we heard so much about retailers having to slash prices ahead of the holidays because of the added inventory they had. So when you look at sort of where things have been traditionally on Black Friday, how steep are the discounts on this particular day?
Well, they're pretty steep, and I think the consumer's been conditioned over the last 6 to 7 weeks. We saw retailers starting to move towards sale pricing in mid-September, trying to get the attention of the consumer to start looking for bargains early. That's not surprising. We will likely continue to see that during the holiday season, and don't be surprised if we see some more sales in the next 3 to 4 weeks. Every retailer in America, good, middle, and bad, is looking to find your attention to come and shop at their store. So look for more discounts, look for better bargains as we get into the holiday season. I'm optimistic of that.
Now, Naveen, you know that this is the tale of 2 Yuletides. You have some of your more budget-conscious, lower-income shoppers, and then you have your wealthier shoppers. And about 50% of consumers earning less than $50,000 plan to significantly cut their budgets, versus about 24% of those earning about $150,000 or more. So what does that do to the overall picture here long-term when you have such a bifurcation?
Yeah, we've seen this polarization of retail and consumerism for the better part of 7 to 8 years, actually coming out of 2008 recession. So you've seen the value sector actually take a larger wallet share for what I call the mid-market or mid-legacy retailers. So in the U.S., retailers like Sears have suffered because people have downshifted to a Walmart or a Target. So the U.S. consumer that makes $50,000 or less will likely spend a little less, but they'll get more bang for their dollar by going to discount or value retailers, Ross Dress for Less, Marshalls, other retailers of that ilk. But at the same time, we're also seeing, as Macy's reported last week, that a big part of their growth in the third quarter was through luxury buyers. And don't be surprised if we see an uptick in luxury buying moving into the last month of this year and into 23. We've seen luxury retailers say that the U.S. is their #1 market for growth opportunities in 23, seeing as we still have an Asia lockdown that's unpredictable in 23. So I think luxury will be a surprise sector in 23 coming out of the holiday season as well.
What does the debt picture look like for consumers? I mean, we keep hearing over and over that, yes, people are spending, but they're using their credit cards, they're using buy now, pay later. What does that suggest where things are going to look like come January and February?
Yeah, well, we've certainly seen a lot of news reports about the fact that most consumers have started to tap down into their credit for the first time. Remember, we didn't spend much money for the first 6 months, the 7 months of the pandemic. And so all that plus government stimulus is what drove a lot of consumer spend or last year and a half. But you're right. I think now we're starting to see that impact, and we're also seeing the impact of the increased credit charges from borrowing on revolving credit. That to me is something to watch for the first quarter of 23, because I think if we don't see any kind of growth in the economy, which I think people are expecting some form of recession in Q1 or Q2, that may impact retailers, but only for a short period. At the end of the day, most retailers are predicting if as a slowdown, it'll be only 1 Q, maybe 2, but look for by mid-summer of 23 for a recharge. And once we get the interest rate markets leveled and predictable and flattened out, I see a big supercharge in the economy for the second half of the year.
I'm sure people will be keeping an eye on those credit card bills come January when that hangover kicks in. But I do want to ask about an interesting trend that we're seeing in terms of the rise of foot traffic into brick and mortar stores, surpassing what you've been seeing with e-commerce. What do you attribute that to?
Well, I think we learned a big lesson during the pandemic in the U.S., which is that for all of the expectations for brick and mortar fading as more people got used to buying online, what we saw was that as soon as you let the public go back to the store, they went back in droves. And that's when we saw a massive leap in 21. 21 was the greatest year-over-year gain in retail in history. People like to shop physically, and retailers got better at making their stores more appealing, more attractive, and more entertaining. They got cleaner, they got smarter, better product mix. As a result, you saw a better experience walking into the store. Retailers learned that, and they've taken those lessons and applied them towards this current shopping environment. So I don't see us ever reverting back to a full online environment like we did back in 20. What I do see is us learning how to shop both online and at the brick and mortar in a healthy balance. But the days of seeing us shop online and engaging with that fully, those days won't happen in the US. We're too much of a suburban shopping market, which means we don't mind getting in our cars and shopping when we can.
Yeah, I think I might put myself in that category. Going to do my part this weekend, Naveen, to go out and shop. JLL President of Retail Advisory Services, Naveen Jaggi. Good to talk to you today.